WEX FSM allows you to create and manage maintenance plans and sync that revenue to QuickBooks. Some companies use liability accounting for their maintenance plan revenue. Liability accounting is when a maintenance plan is sold, but you do not recognize the income as job income until the service is completed. Since the service to the customer is not completed yet, it is considered a liability. Some states require liability accounting to protect customers in case the company fails, so refunds can be provided. The revenue for the maintenance plan syncs to a liability account in QuickBooks, then is moved to an income account after the service is provided. Let's look at how you can set up liability accounting for maintenance plans in WEX FSM. As a reminder, it's always good to check with your accountant to see which of the options we provide today will fit your business tax and regulations best. The first step to setting up liability accounting for maintenance plans is to create a maintenance plan template. Navigate to More Applications, Maintenance Plans. You can edit a current plan or click New Maintenance Plan to create a new template. When editing the template, go to the Account section and select a liability account. All chart of accounts in your QuickBooks will sync to WEX FSM, and you will see them in the drop-down here. The revenue will save in this account until you provide the service. When you're ready, save the template. The next step is to set up products in the price book to make the process of moving the revenue easier when the service is fulfilled. Navigate to More Applications, Price Book, My Price Book. Click Add Product and select Discount. We will use this product to remove revenue from the liability account, so let's name it Move from Liability. Save to the category you want and choose your liability account. Set the price to $0. You will edit this on the invoice when moving funds, then click Save. Now create a second product the same way, but choose Single Part Only. This will be used to add the revenue to your job income account. Let's name this product Move to Job Income. Select the category, then choose your income account for jobs that have been completed. Keep the price at $0 and click Save. With these two items set up, you're ready to start selling liability maintenance plans to your customers. Now let's walk through some scenarios for selling liability maintenance. The first scenario is selling the maintenance plan and taking payment up front, then doing the service visits later. We want the maintenance plan revenue on file, but we don't want it to count as revenue until we provide the service. Navigate to an invoice, select Recommend a Maintenance Plan, then add a maintenance plan template that's set up for liability accounting. Click Save to add the plan to the invoice, then click Sign Up Now to attach the plan to the customer. In the Contract tab, check to make sure the correct liability account is selected. Fill out the rest of the information. Choose the payment option on invoice, then click Done. When your customer pays for the invoice, the revenue will sync to the liability account and stay there until you complete each service. Let's say our technician has completed the first visit. The customer has already paid, so we don't need to invoice them again, but we need to move the revenue for this visit to the job income account. Open the original invoice you used to sell the maintenance plan, then add both liability price book items we created earlier. Click Add Item and add Move from Liability and Move to Job Income. Since this maintenance plan is $100 and we've completed one service, we need to remove $50 from the liability account and add it to the job income account. Edit Move from Liability to subtract $50. Then edit Move to Job Income to add $50. Check to make sure both have the proper account selected. The two items will cancel each other out so the invoice total will stay the same, but now that the service is complete, the revenue is subtracted from the liability account and added to the job income account. For the second visit, do the same process, which will move the remaining revenue to the job income account. Keep in mind, you can also make a new invoice for each visit if desired. In this scenario, you will create 3 invoices. Create one invoice to add the maintenance plan and send the revenue to the liability account. For the first visit, create an invoice to move the revenue from the liability account to the job income account. Add the same items as before and follow the same process. Add move from liability to subtract $50 from the liability account, and move to job income to add $50 to your job income account. For the second visit, make an invoice and follow the same process to move the remaining revenue. That way, each job folder will have an invoice for historical record. Another option is to move the revenue from the QuickBooks side versus moving it in WEX FSM. You will set up and sell the maintenance plan template the same way in WEX FSM, but instead of using the price book items to move the revenue, you can create a general journal entry in QuickBooks. First, determine how much revenue you need to move from the maintenance plan appointment scheduling report. We want to move all revenue for completed services for the current service window. Set the maintenance plan status and service window filters to current. Then select the complete appointment status. This will show all completed services for the current service window. Add up the amount of completed services and multiply by how much you charge for each service visit. Log into QuickBooks, create a general journal, and move that revenue from the liability account to your job income account. For example, if you completed 10 service visits at $50 each, you will debit $500 from your liability account and credit $500 to your sales or job income account. Add a memo to the general journal for historical record, like completed service windows for February 2026 if desired. Then save and close. Refer to your accountant if you're not familiar with creating general journal entries in QuickBooks.